the Breakfast Club. We're back finally after the fluid mayhem that we had yesterday. I tell you, it's true what they say about water and computers. They don't go well together. That last, the very last thing you heard on my presentation yesterday was bonk. Oh shit. And all of a sudden, boop. Well, the water ran straight into a hub. It dumped straight into a hub I had that has like a 7 hub USB port. So it literally fried my camera, and I didn't realize that. So it had been sitting there all day. I was worried about the computer. It ran off the desk, down underneath, dropped straight through the top of the big filter or fan top, the little holes in the top of your computer there, and dropped right on top of my big monster, because this was a gaming computer, video card. And then boop, fried a monster video card. So it would have been like $1,700, but I took it to a guy in town here, and he works out of his house, and I just managed to get this. He says, "Here, I'll put a new video card in. It's not a gaming card, but you know, it'll get you back in action and doing what you need to do." So he put it back in there. He's let me test it out, and then I'll pay him later. So I had to pay for a new camera. I like this one. It doesn't swivel side to side though, and I like that. But anyway, it's a good camera, and I had to get a whole new hub. Then I had to get an extension cord for the hub because the one they gave is too small. I tell you. So far it's about a $500 hit. I haven't got the video or the price of the video card. It's secondhand, but it still works. Anyway, that's the story. Lesson learned. No water. At least put it in a sippy cup. You know, a spill-proof cup. Just keep it off your desk. Keep it away from your computer. You know, the most logical, it makes sense kind of thing, right? Anyway, let's get back to the markets, shall we? And we'll see what we got in store for us today. Hopefully the sound quality is good. I've cranked up. I think I'm up to 500% on my mic now. So hopefully you guys can hear everything that I'm saying. I'll try and stay close to my mic. All right, so let's have a look at the markets here. So overall, what I've been looking at is on a daily chart. We'll just kind of where was it going with all this, you say? So what I'm looking for is, do we get down into this imbalance down here and right back into this SIBI on this side? Now an inversion. So if we get into here and get below this level and come back into it, I'm probably bearish for a while. I don't want to get below here. If we get below this hourly level that we're just heading for, then this first and second discount becomes important. If we just dip into this level right here and hold, just do a little wick into here and then respond back up, then I'm looking for this to go back higher. So this, I would like it to be the bear trap. Us to get into this little bear trap here, right there, where everybody thinks, oh, it's going to go lower, and then respond and reverse. See how we've traded below this first little inversion here on the 4 hour. We trade below it. We came back up inside it. We tapped it. We did not trade back above it. and we went back lower, cleared out this one on the downside, came back into it, tapped it here, go lower, cleared the mean threshold right there. You come back into the mean threshold there, continue to go lower. So ideally, I'm bearish right now, and I'm looking for this to go lower. Okay, so we're looking for to start reaching into this. And we're back to that, the typical, when you have a run above a consolidation here, we wanted to see, remember I always like to talk about having that BISI occur above the level, not below the level. So this is the one that occurs above, creates this BISI, and then we have the graded response we talk about is either leave straight and go for a new high, or if we do come back, you want to see an institutional order flow intra-drill. You want to see something just inside that BISI on the high, or no more than 50% of this BISI, which is the consequent encroachment, which should put us right near the top of the old high here. So we've already done the institutional order flow, made new highs, created a reversal. Now we're into the reversal. So what we're looking for next is, are we going to trade below this level? And are we only going to trade back into 50% of this range or 50% of this BISI and then get some sort of kickoff off of there? So in the next few hours, does 10 o'clock put us in here and then start to reverse and go back up for the rest of the week? So we're at Tuesday now. So I want to see us drop into a new low, take out yesterday's or Friday's low, Thursday's low, and then, sorry, that's not Thursday's low, that is at least Friday's low, because that's Friday's low right here. So we want to be just below. If we take that out and then come back into the range is what I'm looking for. So I'm looking for any opportunity for a reversal here. That makes sense to you guys. So I'd like to see it gap down today. That was when I put this out on Sunday. I want to see it gap down and return into the large hourly range before going higher. If we close below the hourly discount box, then look for the daily objectives on the daily chart. So here's our hourly discount box. It's the go, no go for the daily lower objective. So that's all I want to see is just us dip into here and then reverse and head back up again. So I'm watching in that whole zone, and that the zone I had marked off right here is like a whole area for a weekly low. If we end up running into here and we take this out, then I'm looking for us to reach into his daily objectives down here. That's what I have these marked out for. And that's the zone of looking for a low. So anywhere, as soon as I start getting into this level, I'm looking for any opportunity to see a reversal. Does that make sense? I hope it makes sense to you guys. But that's my narrative. That's what I'm kind of trying to build right now. And so far it's unfolding as we had expected. I keep saying we like I've got this multiple personality thing going on here. But anyway, this is what I'm looking at. So I'm going to put on here a 15-minute. And here the 5-minute. And let's see. I've had to rearrange some of my screens, so I'm used to having my screen up there be the one that I'm using to present to you guys on. All right, so let's have a look at Let's make sure everybody's all right. So let's look at Shazid Sandhu. Good morning. Perfect audible. I like it. I'm glad to hear it. Like, thank you, sir. Or ma'am. I'm not sure who that is, but respects anyway. Campione, Sandra, Abs, Kevin. All good morning. Good morning, everybody. I hope you always have a wonderful day. All right, let's look at I do like my video to be up there, my main screen to be at like eye level instead of down here, but I guess that's what I have to put up with right now. Because the new graphics card they got put in, the main screen is attached to that one down there instead of that one up there. So I'd have to go in there and try and pull all the cables out. Can't be bothered. I'll have to get used to this. Okay, so you know where I'm looking for the objective for this morning. So let's look for, oops, that's a 5 minute. This is going to be 1 minute. What time is it? 10 to 7. I'll start my review in a few minutes. How's everybody doing this morning? I hope you're all doing well. Hadi, good morning, my man. Derek, you look better on this camera. AI enhancement. It's exactly what it is. AI enhancements. Cheeky monkey. Yeah, that was a bit frustrating yesterday. My brain was redlining. It's like, oh man, now what am I going to do? And I just thought about, oh, I've got all my stuff on my hard drive. I got all these pictures, family. Like, oh man, it means I got to try and find a way to get all this stuff off the hard drive. So now I'll spend my day backing it up and then deleting everything. I want to keep this thing as clean as I can. All right. Shall I get started on my review? I'll do it now. Let's have a look at the hourly on the ES. God, this is perfect. Absolutely perfect. If you guys study this and you see it, you're going to catch the most perfect little runs. Watch this here. You see how you get your run above this high? You've got this fair value gap that forms here. You trade below it right here, and then you go boop. You literally open below it, come back, tap it, and then go lower. Take out the low, trade below it, trade back into it, tap. So 2 separate entries you can have for continuation. You take out this low, you trade back into it. 3 entries and continue going lower, aiming for discount box here. bang, done. Entry, exit, or if you're still short, wait for it to clear this one out. So you're basically looking for, right now, if you do the TP model 3, you would you'd still be in this. From that entry there, you'd still be in it. We did not trade above this one. You did not trade above this one, and you did not close above that one. So you're still in this. And you would have caught that all the way from 560 or 56.73 all the way to where we are presently at 56.25. I tell you, it works. It works, it works, it works. And here's another example of what happens when we get a big, long fair value gap like this. And we have one candle that finally rips through on the close above it and also takes out the breaker. We close above the breaker. Then we just come back to the breaker, its mean threshold, tap it, and away you go. And you would have caught all of this run up. And you look, wait for the first reversal that says, hey, look, I'm on the wrong side of this thing. And so far you don't have anything except to here. And it trades all the way back inside. It even wicks through. So you see that and you go, oh, I'm in a losing battle. But if you follow the rule of, I've got to be below that level. If I see a body trade below that, I'm on the wrong side. So you'd have to be willing to give up all of that if you're following it to the rule perfectly, right? And then you see this pop back straight through it. Does not take out the high. Does not take out the high. We get all these candles and nothing closes above it. And what does it do? It comes back into that level there. We don't get this one, but you're back into 50% of this range. And then we continue going higher. And then you get your reversal. This is the reversal, this immediate rebalance you see right here. It trades, it opens below it. I don't know if that touches it or not. That one's high. It is 704.75. This one's open is 705. So it literally opens right on. You'd have to be like pretty savvy to catch it. But that literally opens on that spot and trades through. All the way back down to this BISI here. Get your reversal, then continue on. So right now, you're still bearish. We get through this level, or if we just get a body that trades through here, look for continuation on the downside and look for a deeper run. And where are we aiming for next? Looking for this guy over here, and then this SIBI down here, which is way down there. That's exactly it. As soon as I saw the glass tip over and just saw, oh, that's like 3/4 full, but I literally dumped it right into the hub. And I didn't even realize it till I got home. And I pulled the hub apart, and it was just, it smelled like my vinegar water. I drink that vinegar water in the morning, and it just stunk of vinegar. And I pulled the video card out, and it was all rusted. I was like, oh man. So I'm tapping on this thing. It's just all this water coming out of it. Must have just flooded it. And all the components had just been sitting in the water inside the electric. And the light was still on though. Anyway, doesn't work out well, that whole vinegar water, acidic water. Even better for electronics. Not just regular water, but acidic water. Oh yeah, so we're back to here. So that's your hourly setup. Look for your reversals anywhere inside here now. On the lower time frames, 15 minutes. Because you're looking for any opportunity now to catch a reversal. At a time of day where 9-10 turn, you should be expecting a reversal. Okay? Right at a level on an hourly chart that you're expecting a reversal. So this would be a great place to catch a reversal. Just saying. in 1 minute. 1 minute right now has already given it to you. We've got this big displacement candle here. So if you get a run above this level here, take out that premium box. Because don't forget, if we just climb above this, then you run up to here at 56.32 and then reverse and come back down again. That is your next. So you got bull trap here if you don't close above here, then bull trap here if you don't close above there, and if you do close above there, then start looking for a lot more leg room. Get a lot more playroom. Look for the breaker here first, and then as you start eating through that, then we're heading for the next high. We looked at this. We want to see this return back into this level. So another few more little dips down here to the top at 49.56, 950 area, and see if you can catch a reverse in here. You could come all the way down into this candle's open. There's a couple of imbalances in that down in here. The consequent encroachment of this daily here. All of those are, there's so many little ones inside here. You can just see it reaching the wick, just reaching into each one of these little areas. There's so many of them in here with the Dow. I'll get to that one in a minute. Copper, we've got copper reacting off of here. We still haven't broken this high here yet, so you're technically still bearish. We have not broken that high. So you have to break that high, take these two candles out, use them as support to run higher. The heck happened here? US dollars. I don't want that. Jesus, I have no idea what all this lot is. US dollars. I don't even know what went wrong on that one. I have a good time to figure that one out yet. All right, I'll get to gold in a second. Let's look at some of these commodities. So we bounced off this sell side, old sell side liquidity. We got back into that box. We hit it perfectly yesterday, and then we're opened on it and traded all the way back down. So now I want to see us start to drive through here. This whole waffling thing in here. I don't want to see us get back above here now. So I don't want to see us revisiting this. I just want to see us come back into that and just tap it. Like right in the consequent encroachment and then come back down. Reach in here. Or just tap right there would be even better. And then start turning into a bear candle. This one I want to see some support in here and start pushing for those relative equal highs above us. I don't want to see us get below this level here. We've already come back and tapped the breaker. The line in the sand is the mean threshold of that breaker down here for me. So if it runs into there, I don't want to see it get all, if it does, it goes below that, then we're looking for a run back into here. The whole candle, typically you put your stop loss one wick or one tick below the low, and you don't want to see the mean threshold get taken. Now that we start working higher, I just want to see them tap off of this and start pushing higher. Cattle. Did we hit our objective? Oh yeah, baby. So we call these long-term objectives a while ago. We nailed that one, and now we just nailed this one this morning. All right, well, it took a while to get there, but for the month of April, had you been with us in the month of April, you would have caught a huge run up in live cattle. I don't know how much that's worth per contract, but we just nailed our 2 objectives there, so that worked out really good. Must be something to this, hey, or is it just lucky? So those are the 2 areas I'm looking at in cocoa. You're kind of in a small range here, or a large range, depends on how you view the value of cocoa. You got relative equal lows below you, you got relative equal highs above you. So which one do you want to take first? Dip down into here, then run for that level, or run for that level, then take this level. So I'm kind of flat with cocoa right now. All the time we stay right there and start to come back down. I want to see it drop below 86.30. If we can get below 86.30, come back into the 86.30 area, and then look for a run down into here. Corn ran through our objective. Good. Now come back, tap it, and start coming lower. See it run for these lows here and start heading for another downside objective we have right here. And little piggies, they're still in the barn. They've been in the barn for months now, getting fattened up. They're consolidating. We're waiting for a expansion to occur in the little piggies. An oil. What's going on with oil? That's what you would say in England. Oil. How's the oil? All right, so upside in oil. Obviously, we're very bearish or bullish on the hourly. I like this. If we come back and retap these lows here, yes. If we come back and revisit, take out these lows here, I'd like to see us come back to these old highs here. So if this doesn't quite give you your new high, freezes right there, it turns into a bull trap and rolls over and comes back down. Look for it to take these lows, come back to these old highs here. That should pretty much put you into the, and then look for the reversal on the lower time frames here for this to continue going higher again, because we could revisit this fair value gap, the SIBI here, come back, revisit the low of it, which is these equal highs. Watch this. If this just keeps pushing through here and people get frustrated because those highs, you expected to take the high and it didn't, it just engineered some relative equal highs, comes back down, takes this out, then takes out those highs. You'll know why, because you're looking at the hourly retracement back into the SIBI. At least that's what I am anyway. So if you see something like that, wait for a reversal and then look for those highs. Gold, I'm long in gold. For yesterday, I got in this. I was in this way down here, and that little thing right there took me out. And then I didn't watch it enough to get back in there a few hours later. It took me out there. So I'm looking for, and I would have been in all of this still. So far, I haven't seen any break. So if you're using this, just using this idea, if you see the reverse, so we've taken out this low, you see the reversal right here. And I wasn't watching this many hours later, but you see this, it takes it out. There's your entry right there. 1, 2, 3, 3 different entry points. You would have got number 1, you wouldn't have got 2. You're at your entry there, and you trade just with a take profit model 3. Okay, so let's pretend we're using the take profit model 3 method. Here's your first BISI. You run through it, pay yourself at the high or rejection block. Comes back inside it. You say to yourself, I do not want to see the mean threshold of this candle give way. I do not want to see the breaker giveaway. And I don't want to see this whole thing close in. So you could load on another chunk there, put your stop loss down here now. So now you're above, you've traded here. You move your stop loss to break even because you don't want to see this get closed below. If it closes below it, then you're on the wrong side of it. It's already swept the highs. It's coming lower. Comes back to the consequent encroachment, nails it nicely. Runs higher. We do not get one a trade. We do not get a reversal through here. We do not get a reversal through here. We get a reversal through here, but we do not have a body that closes below it. So you're still in. The rule says we need to see a body trade below here. It just wicks through, gives you your institutional order flow entry drill, continues to go higher. This one here, no trade through, no trade through, and keeps going higher. No trade through, right? So we're just using that model. So you're in gold from down here. And if you just had 2 contracts on that, that'd be tens of thousands of dollars by now. Like that's $5 grand up right from there to there. Imagine what that would be from here all the way to here. That'd be $40,000, $50,000 right now. Or $20,000 if you're looking at your other one. So if I was there watching this a few hours later, I could have caught that again for another long. And so far, take profit model 3 would still have me in this, which is what I'm going to stick with here now. I don't want to see it get below here. So you lock in some more profits and let her buck. That's the method I teach you every single day. I believe in it. I'm 100% committed to it. We have this fair value gap here, and there's a little fair value gap over here that we traded through and come back to it and then leave another entry, another load on some more if you wanted to continue going longer. Okay. So hopefully that helps you guys. Natural gas. We have a reversal here. See how you got this bunch right here on the daily? I'll go right there to right here. Body trades literally opens on it. See that? That's the confusing part about this, is to say, and I've had this discussion with you guys in the past about whether or not you look at that as your entry. As soon as a body closes on it, I'm in. That may be your first entry. You may go, no, I'm going to wait for a body to close above it first before it comes, and then wait for it to come back and tap it. If it does, then I'm in for the long inside the range, 50%, 62%. Take profit model 1 if you're using the fib tool inside the range. Right? But anyway, that's that one. Looking for Bitcoin now is traded below this 15-minute breaker. So this is the thing we were looking for yesterday. If it trades below this level on a close, I was telling you guys this last night. Somebody was asking me about Bitcoin last night. And I did a little test. I've deleted it off of the channel. I was just testing the camera out. And while I was in here, a couple of people popped in and were asking me about Bitcoin. So this is what I was telling you last night. If you're in here, remember, if we trade below that 15-minute level, we traded below it, you came back into it, and now you're in this little run down to the next level. We're sitting right here, and you're already in it. Right there. You just tapped it. So pay yourself at that point right there. Looking for these lows to get taken, and then I was mentioning about running for these relative equal lows below you here. So with Bitcoin, there's your entry. Pay yourself, pay yourself, pay yourself. If you trade back above this, look for this support level here. Well, this wouldn't be support anymore, just I know Michael doesn't like the words support and resistance, but that's typically where you'd that's the resistance you want to see it hit, that it becomes support if you can get above it. Okay, this level, I want to see this be the new resistance, and then trade through these lows. You got all these relative equal lows below you. Oh yeah, this is Pato. So I'm still looking for Pato to react and come back down. I want to see these lows get taken first. Run back into this little box right here. Get below this one. Use support at this one. Dig into here. Catch along at 13 something. And then you got yourself a nice little dividend paying stock that pays you every month 11 cents. So if you get down into this $14 area, 11 cents is just shy of 10%, and it pays you every month. So almost 1% per month. Anyway, let's look at the DAX. Got a reversal yesterday. Oh, this is not yesterday. Here's your close above. You did not get an opportunity to get in here, so you wait, right? You look for the next one, which is sitting right here. Okay, so when you look at these, kind of just look at that one, and you say, well, how do I know that you're not going to come all the way back into this one? If you get a bull candle that runs all the way through that whole one, and it just keeps ripping right through, it runs through the second one, always go for the last one, not the first one, to make your objective. Once you've cleared your objective up, we may come back into this one a little bit later, and quite often we do. So you got to pull your fib tool from high to low, but right here, if I'm looking at this little level right there, see how the body trades above it? This one here, we traded above it, we didn't get back into it. It just kept going higher. So you go, okay, if it takes out the next one's my objective. Takes out that one, tap it. Now you want to go long. Now you have to ask yourself, where am I inside this range? And I'm going to look to the left, and I'm going to look for the first bullish candle to the left. So you go, these are all downward candles. So the first bearish bunch that I'm looking for on this side is this breaker right here. So that's an up close, open 13, close 11. So that's a bear candle. So there's your breaker right there. So I'm looking for this range. So if you're in this one right at 50%, as soon as it hits 62, take profit model 1, you move to break even, pay yourself here. That hits 70%, pay yourself there, move to 62, so on and so forth. The same method I've showed you many times before. And then you want to reach for this breaker. If we can get back into the first presentation on Monday, get through that. That's your premium array, discount, premium. So if it bounces off of here and starts to come back, where do you think it wants to hunt for? The halves that it hasn't even reached yet, right? It never validated them. So if you get into this consolidation, look for this level to get taken for continuation. Look for this level to bounce off of it, see a reversal, catch the reversal back into this range, and you're aiming for this discount box. Does that make sense? Yes, no? Anyone? Bueller? No? Anyway, we'll move on. Max is still looking good. I'm still looking for this breaker above us here. Gary, I don't know if you're watching, but looking for this breaker above you here. I'm on the daily chart, so I know how you hate this, the lower time frames. Same principle for the upper time frames. Still looking for this breaker above us, finding some support at this level here. Now that we're trading above it, find support here off this order block, and I want to see this start running higher. These are all good. Disney, what's Disney up to? These guys pay 13% dividends And they're in a nice little low right now. 13% dividends. That's Bell Canada. So if you catch yourself a nice reversal here, catch along, you have a nice little, and the lower it goes, if the dividend doesn't change, the dividend pays 99 cents, almost $1, and it pays it out per quarter. Relative equal lows below you in Disney still. It's waffling around in here. Still want to see no more than that 96.17 for Disney. Now you see how we're above this level here. We're closed above it. So now you're expecting a run back into this range. Pull your fib tool from low to high. Or high to low. 62% puts us right in the middle of this box on the 4-hour. And it puts us pretty much right on the consequent encroachment of that. So if we tap that and roll over and come back down, or if we use that for support to go higher, looking for that 62 or 96.17 level, and I don't want to see it go any higher than that. If we close above that, then we're coming back into the range. Disney's recovered a bit. I want you to see these. This works, and I've showed you on multiple different asset classes here now. Here to here. Look at that. Right inside the consequent encroachment of that. Or if we just pulled it from that wick low and we ignored what Michael typically says you have to add, which you should, it just came back and it opened right on it and then went higher. Where are we aiming for? This one right here. And you've just hit it right there this morning. So between 2 days, you would have caught 2 days of run back into from box to box. Still no body above this level yet. See how we've got relative equal highs again? Does this create a bull trap that you think Ford is actually going to take off now? And it rolls over and comes back down and finally dips into the level we're looking for? Or I'm looking for anyway. See here, and it did. Just off that civvy. So you've got all the way down to that high is also this high here. So if this comes down into here, taps that, and then continues to go higher without reaching into here, you want to see higher prices and run for these Asia, London, New York sessions, previous days, previous weeks highs. If the American dollar continues to drop, you want to see a body close above here. We don't have a body close above there yet. Look for this level down here. Do we find support at this level here right now? We've tapped it before and kept going back up, and we keep coming back down into it. So you know, this would be that graded response frustration thing for me. I want to see this get below that level on the close and then start taking out this level on the close. So as soon as we see once, twice, three times, tells me it's weaker, it hasn't got a lot of strength to get back up there, but we could quite easily find support off this main threshold and then continue going higher. So I'm kind of flat right now, but it feels kind of weaker right now. To at least we get back into that candle. I want to see us dig through here first before I start getting back into this bearish run. This could go bullish on you. So I want to see if we can get through this level here. Australian dollar. If this does keep going bearish, then I want to see Australian dollar reach for the little pool of liquidity up here at 65.55. New Zealand dollar. Well, I've got to let some fuel under this thing. It still hasn't broke its relative equal highs here, or equal highs. So you want to see it break above that, come back, find some support at this, and keep pushing higher. Euro. There's the reversal. See if you see this. Let me just make this bigger. We got another 7 minutes yet. You see, I'll just explain each one of them to you right here. Body trades above it. You come back inside it, go higher, take out highs, reaching right up into, oh, look at this, box to box trading. Have you ever seen box to box trading in a Forex market? Let me show you. Where did it go? Is that it? I don't know if I consider that. No, I don't think I would consider that. Come on. What was I looking at? I was looking at this here, but that, I don't know if I consider that an immediate rebalance. We trade back into this box, which is not the discount. It's the discount box inside this range. Usually what you see is if you're going to run this low here, you want to see it take that low, trade back into it. After taking it, the low, you want to see it come back into it and then go lower, take out that low. We had a big wick in here that finally did follow through. That wick would have been a destroyer. Finally takes out the low. You get a reversal here, body trades above it. You start running back inside this range, take it out, then the next range, and then the next range. So it traded back into this imbalance, rolled over, took out this, creates this BISI, takes it out. Now, sticking with the rule, if a candle takes out one and keeps going, and then you want to see it take out the low, there's nothing else in here. So the mean threshold is the last one, you've got less. If you see the candle takes out all 1, 2, 3 levels. Remember, we've talked about this in the past, that if you get one candle takes out 3 PD arrays in one candle, your ass is next. So it ran straight through 1, 2, 3, unclosed, then came back up into the mean threshold, the areas where you want to be, somewhere around here, wicks through it a little bit, and then takes your ass out here. See a reversal. Next reversals here. So if you're trading Forex, this stuff is still visible on Forex. Body trades above it. Oops. Body trades above it. You come back into it. Continue going on to the range. Here's your premium box right here. So box to box trading in Forex, hit, 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 body trades above it right here. So you think, oh, I'm going to go long now. Then all of a sudden, see that? And then you come back. Let's say you decide to buy in here or here or here. And you want to see it go higher. You think, yeah, we're going to go higher now. It trades back through. You go, I'm on the wrong side of this because we closed below that level. You don't want to see, once you see that tap, you want to see it just start leaving from here. The fact that it starts to eat through that, you go, I don't want to see it close below there. If it does, it's obviously it's either going to run for your stop loss, depending on where you put it here. You're on the wrong side of this. So as soon as it takes out this candle, you go, I got to get back in sync with it. As soon as it closes below there, comes back, finds support at that candle, runs lower. There's nothing in here except this immediate rebalance. It rips right through that, right through this candle. And then we get the small little reversal right here. It runs back up. Mean threshold. Takes out the lows. You get the next reversal here. Body trades above it. You don't get into it. You get a body trade above here. Now you're getting into 50% of this range and the premium box. So what you want to see now in euros, you want to see it get back through here, find support. And this one that failed, you want to see this one work and then take out these relative equal highs above here. Again, hoping that the American dollar continues to degrade into that area we looked at down here. Looking for our Japanese yen to start climbing again for the next price leg higher, taking out that high. Silver. This would be nice to see this next price leg higher, run for this objective we have sitting up here, which would be so we need to see this high get taken and this imbalance here to get taken on the upside before reaching for that objective. All right. So here we are down in our hourly box, and our bigger hourly is down here. This one that's going to set us up for a further downside if we end up running through that today, which we don't want to do. Here's our regular trading hour gap. No bodies above here yet. So it's the same rule that you apply when you're in this right here. So if you're in this for a short and you catch that short, your stop loss is sitting there, you go, ooh, I got squeezed pretty good there. But you're still in the trade. It takes out the low. I do not have a reverse. I do not have a reverse yet. As soon as I get a body close above here, that wick would have done some damage. I don't have a body close above here. So if the body closes above there, then that short is out. Where can I find your models? You can check the videos. You can check the videos in here. I've got a couple in there about I'm talking about the take profit. I think it was a Sunday, about 3 Sundays ago. I was talking about different take profit models. I think I focused on take profit model 3 and 4. So we closed above that level now. We're back inside the range. Look for this premium box up here now. And we finally got a run above this old high here. So we have some market structure shift. This is good. Right inside that hourly box. And we've got all this above us here. Or Hans loves this little first run into 50% of the regular trading hour gap. Now, if we start to rip through this, I'm starting to turn bullish again, right? That's your regular trading hour gap. There's the premium box. Came right back into it. So we have not got this discount box opportunity, and you didn't get this one here. So now it's come back and say, okay, we'll give you an opportunity to get in on this one here. Or if it rips through this and comes all the way back down to the one little area that never gave you an opportunity to get in either, that's an extreme discount. Right back to the first presentation, fair value gap on the 1 minute. Tap it, and now we want to see it rip through here on a close and then start taking out these highs. So these two key areas, remember the first fair value gap, look to the left to look for the first bullish candle. This one's nestled inside these two, so take both of them. Unless that candle closes just above here, comes back, gives that a tap. You're aiming for that high. This one here, it did not close above it until here. Then what did it do? It finally came back and said, okay, I'll give you an opportunity to get in here and the first presentation. Now, if you're going higher, you're looking for that first or premium array right here again. As soon as you can see, get a piece of that, pay yourself. We start to run back through this level. This is the bear trap or the bull trap, where it does not close above the next level. So it's above this one, gives you an opportunity, trades back in. You pay yourself at the premium box again. Now you want to say, I want to see it get above here now. And then I want to see that bull trap stay open and keep running. Trap the next guy who comes along. So you should be paying yourself at that level there, because if this holds and rolls over, then the bull trap catches you and you're expected to go long, and you've gave up profits from here to here. Pay yourself. It's 2 minutes of quick profit right there. Internal range liquidity hunt, and you're above 50% of that range anyway. So you're paying a premium to sell it at a higher premium, hoping it goes higher. And it just might do, but better to put money in your pocket. Good morning, Peter. Hans. Thank you, Hans. Thank you. Thank you. There was an emotional moment yesterday. See how these equal highs are staying intact right now? And the fact that we just keep wicking back and forth like this, you want to see this tap it and go. If it's acting the way you want it to act, you want to see it tap and go. Thank you, Hadi. I didn't set out my times again. I love it when Hadi reminds me here. 8:30. Oh, that's a nice little tippy tappy. Let's go. Let's see it take off from here. I just don't think they're going to leave this untouched. We only just barely got one along off of here. So this pop, pop, pop through here until you reject that and come back down into here. Look for this level here. And then look for a run up higher. Okay, well now they finally took those highs. These highs, but didn't take this cluster over here yet. So if you're paying yourself there from the 8:30 open, oops. Hi, Craig Fishball. How's it going? Let's look at Abs' six-pack here. The Abs six-pack. And that's a Tuesday six-pack of Abs. Then we have the 4 a.m. Oh, you're out of here? I'll be right back. Okay. Well, that's the 4, the 6, the 4. Okay, and then we're looking for the and the open. Okay, let's go back to our regularly scheduled program. So premium box up here. We've gone beyond this one. We came back, we tapped this one a minute or so ago. And now we've, oops, and then we've ran back up to our next premium box. So you've gone from first array, cleaned, come back, tapped it. Second array, above it, come back, tapped it. Third array, up here, hit it, and now we're rolling off of it. So we're at the consequent encroachment. I'd like to see a measure of retracement back into this level and this guy one more time. You don't want to see even it tap here. I want to see it just hit here, that level right there, and then start marching higher. So we're waiting for the big blue bus and our driver Hadi. Now this whole constant tap, tap, driving down, we get through this level, these 3 candles right here on a close. So we get back through this 830 and use 830 to leverage to come lower. I'm looking for this box down here. If this has got legs from the rest of the day now, it's got to get out of here. And this whole, I don't like this waffling stuff. And we're between 9:30 and 10 anyway, so you wait around until you get something. I do see this bounce. We got to close above here, right there. So we got to close above this level here for me to go bullish again back into this range here. If we use this for support of the top here, which is this here. So I want to see that close above there, come back to support off of here. And I want to see that start pushing higher, getting deeper into the regular trading hour gap. What are you looking at specifically in the 15-minute here, Hadi? This candle here. I'm looking at this right here. Usually we just trade back into it. Once you trade below it, you want to see it trade back into the edge of it like this, right here, and then go lower, which it did. Now, if it trades back through this level, because you shouldn't see it have to revisit it again, if it trades back through it, you want to see it go, excuse me, you want to see that go bullish again. Hello? Oh, yes. It ain't done up there. I just tell you, never underestimate this guy down here. You haven't got a chance to visit it. We've just traded back inside this guy again. Watch right here. So now we've really dug into this level. I like that. We're into the mean threshold of that last candle. And we're not using 830 here. We just drove straight through it. It's just enough to take people out here, hey? That's why if you just trade from one to the next, here to the next, pay yourself. Because if you're aiming for higher and it took you this whole waffling, I hated this waffling stuff, finally collapsed below you and you didn't pay yourself at these levels, you'll frustrate yourself over and over again, saying, oh, now I'm underwater and they're carrying me underwater, they're forcing me down. And if your stop loss is still sitting down here, it's getting squeezed now and you've lost all that profit above these levels. So if we just tap this, you want to see a reaction off of this. If it eats through it, then look for lower level, and then that big sucker we looked at way down here, this one. It does work. It does work, Hadi. Got to close above it. And you'll see that more and more and more, right? You'll see that this level that was the discount array, as soon as from here to here, it's the discount array. If we trade below it, you go, ooh, and I just want to use it for support to go lower. And then when I take out the low, I can come back and tap this candle's low, its mean threshold, or the bottom of that. You just want to see the bottom. But if it starts to trade back through it again, it now becomes an important level for extension. So there's 3 levels for it. First level is it a level for discount box? That's the first one. If you trade through it, it becomes support to take out the low. And then that's the second one. And the third one is if we trade back through it on a close, then we're looking for a run back into the range. And we haven't traded back through it on a close yet. And now we're still, that's why you can get caught. And then you say, does that coincide with some potential bull traps that I can catch myself in here? They're really small range ones. That's why if I'm anticipating a potential bull trap and the higher time frame says I need to get above there for support, then I'm going to pay myself at each one of these little potential bull traps. I'm going to go in there and I'm going to nibble the cheese right off the trap before it snaps back and takes me out. And here we are, all the way back to that level I was telling you about. And now we're just ripping right through it, disregarding it altogether. Not even important level. So I want to see it close below here now. And now this level, like we talked about over here, this level becomes that same kind of thing there. You want to trade below it, come back inside it, find support, go below it. If it runs back up through it again, we're coming back into this range. Does that make sense? The 4-hour chart. Oh, yeah. Indeed, Hadi, you're absolutely correct. Here's the 4-hour chart. Look at this. First one, traded below it, came back inside it. Ting, touch it, go. Next one, traded through it right here, come back into it, ting, go lower. Now it's finally taking out the lows. Frustrate the snot out of you who thought that was going to go higher. Did not break above here. Right? I like the way you're looking, Hadi. You're getting, you're really picking this up. I like it. I like it. I like it. Good work, man. So now we've traded below it. You want to see it come back and tap it? Tap this low, this body, this breaker, and watch. If I go like this, from body to body, look where 50% puts us. Let me just turn this into one that you can see it easier. Right there. 50% of that breaker, line in the sand. That means you'll start to be, if you close above that, that threshold, you're above this reversal and you're coming back into that range. So I want to see this tap here, here, or that last down close candle. If it doesn't, it just keeps going. It leaves without me. And then we're just looking for that, the big monster one down here. That's another 600 handles away yet. That could be a Wednesday low. Right off that 6 a.m. Abs is 6 back there. The good thing about it is I like it coincides with this premium array here. And its consequent encroachment coincides with the right in the middle of this. What's this one here? Do we get a consequent encroachment of this one too? That's 50% right there. We have these equal lows below us here at 750. So your next low is 781. Oh, we're already through that. Or we're just hitting these lows now at 753. Next one is 715. And 690. Yeah, I was looking for a pullback for a short. Didn't see it either, Hadi. So just let it keep running. This is kind of good though, because this is no different than what we talked about here. Remember when we said this big bold candle leaves this one untouched? And then all of a sudden it rips through another one, comes back, gives you at least that one, takes out the highs, premium array, waffles around here for a while, takes out the next premium array, waffles around here, finally gives up the ghost, closes below this one, and closes below this one right here. Sorry, it'll be right here on a close. Right there. This one closes below that, comes back up, drops down, closes below this one, so you know you're on the wrong side of it now. There's that discount box. So this is the kind of thing you wait for it to come back in there. And then you watch carefully here because you're wrong if it trades through here on a close and then starts to come back into that range. Because it swept these hourly lows that you were looking for. $7.54, and we just swept them. So you're looking right here. There's the tap of the low. Is it the low? No, just almost there. Of the breaker. We've already hit the low of this candle. That's acceptable. 50% of that wick put us in here. I'd love to see it just come back one more time and tap right here, because we never got it here. So typically if it's got some intentions of getting down there, it'll just keep driving. You want to see it pop through and at least give you this to continue going lower if it's got aggression. But I would like to see us just quickly wick up in here, not a body above here. Because now all of a sudden you have a body above and you're aiming for here. So if it starts trading above that, you go, oh, it already gave me the reversal here. There's a tiny one right here as well. Where is the ideal stop loss if it goes back to the premium box? Back up here. Your best stop loss right here to start is below here. And if you get through this, your stop loss would sit down below here. Because you don't want to see this come back through here. So you want to be just below this level here and march higher. If it comes back through it, then wait for market structure shift. If it takes you out, wait. Because it's got to make a clear intention of getting through here with a body. Tap it and go, not just pop through, and just keep working it for a bit. And then finally making up its mind which direction it wants to go. Because you could get, as soon as it closes above, you'd be like, okay, now I'm going to go long. Then it closes below, you go, ugh, we're back to short. Then it goes long, short. How many times do you want to keep getting hit before you realize just wait for a fair value gap to get cleared above or below that? Like you'd have to wait for you to take out this candle here, or for a body to take out this fair value gap below you here, and then continue going lower. So this is a retap of the low. So this, you'd want to see this just roll over here now and keep coming lower. How do you think's in this one? Oh, you're out of it already. You're in the micro, okay. Same principle should apply. May not have the same kind of look, but the same principles apply. So now we're getting below this level, and watch that little guy right there. If you stretch it out, you'll see it sitting right there. There, you want to see it keep coming lower now. I'm going to go short on that. And my stop loss will go just above here. Now you got to pay yourself at that low. So I'm going to go to break even. Too quick. I didn't pay myself down there. I just went to break even quick and it just took me out. There's a big spread there, right? One, yeah, like a full tick. That's wondering why it took me out. It didn't tap me there. So anyway, as soon as it takes out the low from that little spot right there, see how it came back and tapped it perfectly. That's what you're looking for. Takes out the low, pay yourself real quick. And that's literally 61 to 47. So that's 20, almost 14 handles right there, just from there to there, real quick. Now if we get back through here and through here, now that low has been taken, we have a little structure shift. Now you expect to see it run back up into here. A nice displacement candle giving you intention of where it wants to go would be nice too. So watch right here. I need a coffee. I need water. Oh, I keep banging my leg. I've pulled my computer right in tight underneath my table now, not just sitting way over there on the edge. So I keep banging my legs on it, which is fine. They watch this level here. See, this one has not been hit yet. This one has been traded through. This high has been taken. We're trading through this level. You don't even want to see a wick get through there. So you want to see if a body closes above that. I like this probe through here. Guess where I want to go, it says. Let's come back here, give these guys an opportunity to get on. And then I want to see it drive higher. Keep your eyes on here and here. They're overlapping. Close above that level. Look at that, literally closed above it, opened on it, and now we're going higher. I'm still not finished with coming lower yet. Let's look for a little tap into one of these two boxes right here. We have not got a body above here. We've just came back in. We did wick through it. Now you're stuck between, we have a little market structure shift here. Come back into that candle, push higher, or reach back into this little discount guy here. This one wants to go higher. This one wants to go lower. If this one fails and you trade through it, then you expect to see it trade back to it. It happens to overlap with the guy that wants to support you to go higher as well. So if we get some love in here and you find some support there and you want to see a wick, just tap it and go. The ideal place to enter is long right here, because if it fails and you're on the wrong side of it and it closes below, it'll come back, give you one opportunity to get out, to break even before going lower. So just keep that in mind as it comes down, or if it comes down. Now, if this has really got intentions, this little tap here, now you've got a body above it, tap it, go. Just leave here. Don't even bother coming back down here. Leave that open. Just go. This is your institutional order flow entry drill. Did not get, now here's the difference between, remember I was telling you about, I like to see fair value gaps form above a level, not below them. This is below that high. See how that, if this was up here and that traded through, that would be a nice little tap and go. I don't like seeing the fair value gaps forming below the high. We're right back into that level again. Much like we talked about on the 15-minute chart back over here, wherever that was. Yeah, right over here. Pull your fib tool from low to high, 50%. Use your take profit model 1. Inside here until you get above here. Your take profit model 1 would have been long here, 50%. Oh, excuse me. 50% puts you here, 62% puts you there. So you'd be break even now. Pay yourself 50%. Take half your trade off there. 62%, you're going to pay a portion here, and 62% puts you right in this mean threshold. If you lose that on a close, then you're coming back higher into the range. Premium box up here. It's your next objective. So now see how we've traded above this level? Give it a little tap. You want to go long, and if it closes below it, so I've got it below the 50% of the range there. So stop loss will go back below that low. I don't want to see it keep starting. You've got 3 seconds left. I don't want to see it close below there. It's literally on it. See how it closed literally on it, or closed above it, opened on it, and started coming lower. Not a good sign. So I'm going to get myself out there. And I'll wait. We could get a deeper run in here now. And there's a small little reversal here. See that little tap, this wick stuff. I don't want to see that. You want to see clean, tap it and go. And then you have to have a set of rules in here that says, no, it's violating my rule, and take your trade out. If it goes against you and the wick, and that wick forces you to keep changing your rules, then you get soft on your rules and way too flexible in your rules. and then eventually it's going to come back against you and beat you up. Traded below it. Now if it trades above it, this is that thing I was telling you about. If it trades above, below, how many times do you want to take a loss? So it just came back into that level again, right here. This box, right here. You have to include that little imbalance there as well. If you didn't include the imbalance and you just took it from the wick, tap, running higher. And again, that's I've got to keep my rules. And if that's the flexibility you want, and you want to say, well, I'm going to wait till it, I'm going to put my stop loss deeper. Like if I would have kept it below the low, I would have been okay. But whatever. There's lots of ways you have to develop your own rules around that level. Traded through it, bought below it, finally ran through, took out the mean threshold here. Now you're deeper inside the range. Look for a run up into here. How's my gold doing? There's 70% optimum trade entry. Now you're just kind of looking for that premium box there. Right to the 830 candle already, the open. There's 75% of the range, right on the money. Let's see, settings going to be a little clearer. Trend lines, text. We're through that level now. This could be the big run of the day here now. So you want to get above this level here and take out this on a 5-minute chart. And then you're looking for the next box above you, which is like 898 all the way down to 888. This one here, you want to see that close above there. We've got back into the premium box. We don't have a body above it yet. So if this reverses on you again and comes back down, catches you in a bear trap or a bull trap again, it just came back to the premium box and did not give you an opportunity to get your high, and reverses on you, you got to wait for the body to get above here to confirm. It looks like for a range extension. And then this rule here that took me out of this potential run is the same kind of rule I use here. So if you trade through it, come back to it. If you pop through it and take out the mean threshold of that candle, then I'm out of that. For a long, that is. %50 of the regular trading hour gap is close to 0.5 of the opening range. You want to see support in here and see that push higher now. And then the next price leg continues. I like the support off of here. The mean threshold's holding. I like that. Let's go get some intentions. You don't see this just wicking, trying to get up there and it failing. Could get a body through here. Let's go. Oh, it's deleting on that one as well. I'm going to go along there now that we've popped up above that. Looking for range extension now. Should have paid myself there. take one out at the high. Take one out there. Or it'll come back and get me. Looking at the long there. Be just below that low there now at 830. Where's my next upside objective? Here. Broke the high, so move to break even. There's another little premium one up here. You're having a good day, Hadid. That's good. That's what I like to hear, buddy. See if we can get back to that 4 a.m. candle right there. That'll put us right in that little premium box up here. And I'm going to be sitting here. Now I'm going to kind of, I've only got one on here, so I'm going to delete that. I'm going to manage this with the take profit model 3. And see how much we would give up in terms of profit using that method. I've only got one on here, so we're going to use the take profit model 3 so you guys can see how long it lasts and where it goes and how well it works. So there's my fair value gap. So you mark them out. And there's another one here. So we're just going to kind of, so we're in risk free now. And we're watching right here. I do not want to see a body close below here. I don't even want to see a wick get below there. But if we see a body close below it, we're on the wrong side of it. And because we've already taken a high anyway. So look for 4 a.m. candle. I'm going to make sure I'm doing the same thing in gold as well. That's sitting right where it should. There's the reverse right there. We close below that, come back into that. It's going to come back and take me out there. Let's see how much, that's how much money you'd be willing to lose. It's $4 grand for it to come back there and take you out. So we're going to stay below here. Yeah, well, that's where you have to kind of say how much are you willing to give up, Hadi. Like here, you see how there's $615, and I'm at 185, so it's like 2/3 of your profit you're willing to let go. There's 4 a.m. I want to pay myself there. So if I had 5 on there, I'd take 1 out there. And you see how we don't have a new fair value gap forming here yet? So you got to wait back here. And that's $800. So you're willing to give up 600 and some odd dollars in profits, like 3/4 of your profit to keep your stop loss there. Now I know Michael, you see Michael put his stop loss here and let it sit there and it goes way up, comes way back down, and then finally gets to his objective. He's okay with that because he knows how well it works, right? So I'm just going to try and do that. It's working on some of my discipline here too. And you got to be willing to say, look, even if this comes back and takes me out, then I'm still not at a loss. Don't look at what you could have had, but what you do have. And what you do have is a risk-free $185 in your pocket. If you stare at what you could have had, shoulda, coulda, woulda, and then you see this number starts to influence your decision to break your rules, and that takes off, you go, oh, I'm sure glad I followed my rules because now it's at 1,600, and I'm finally getting an opportunity to move my stop loss up beyond where I would have given it up here because I'm worried about the difference, the disparity between these two numbers. Don't worry about that. Focus on the rules. This is the psychological game you'll play with yourself when you see the disparity between these two numbers. You say, this is the profit I have right now if I just close it out, and that's how much I'm willing to lose. I don't like that idea. So now I look at this level here and I start to say how there's a little tiny fair value gap right there. You see it? This little guy right here. So now I take my stop loss and move it right to there. That guy, I want to be just below there. So in other words, I don't want to see this take this low out again and start closing below this level right here. So look for those little fair value gaps, and you want to be just below them once there's a once you clear them out. You want to see that the upside continues. You don't want to come back and close below them. If it does, then we're looking for potential run lower. So now the disparity is lower and I'm locking in more profits. So now we'll continue to look for this upside here. Looking for the open. We're looking for the 8:30, Monday's 8:30, and Monday, Tuesday, the first opening ranges. There's a lot of draw liquidity above you here. Now if it whips through here and takes me out, then I'll wait for a body to get back above here. Then you can get back in sync with it. And you really have to wait for a body to get below here. So if it just wicks through here and takes me out, then you have to say, I have to be back here and wait for the wick. That's it, took me out there. Okay, so $500. And I think the highest was like 900 and some odd dollars. So now if it starts to close below here, so it's taking out this little low. Watch this level right here. If that finds support and comes back down, you'll see why that was an awesome little place to put your stop loss. And if it doesn't, if the body doesn't close below here, this wick did the damage, it was just enough to take me out, then wait for a body to get above here. Seven seconds. Did we close below it there? Tap it, come lower. you get back above it, then look for it to go higher. But right now we're coming lower. So far it's looking good. The rule's holding out. We maximized our profit. So to see how the difference is, have we paid ourselves at the 4, if we had the extra in there and you would have taken a portion off here and the rest of your trade would have been sitting below here and it took you out there, and this rolls over here now and comes back down, it means you maximized your profit and you had your stop loss or your fail safe sitting at an area you're expecting to see tap and continuation. If it closes above it again, you want to see this mean threshold give way, and then you're going to run for the highs. There's the mean threshold. Yes, I see what you're looking at there, Hadi. Look at the 5-minute chart. Trade above it. I want to see this get a hold price here. Mean threshold. I like that mean threshold. No, don't want to see this low get taken out again now. That little level right there. I want to find support right there and start going higher. If it takes out the highs again, I'll move to break even. It's sitting right in there. Mean threshold is my line in the sand here. Amount. Out. I don't like seeing wicks get through there. So now, can you see how it's consolidating here? You gotta wait for a higher low to get taken out now. Go to your higher time frame, see what how it's setting up in the higher time frame. You've got this premium array over here. And I haven't closed above it. We're getting some wicks up there, but we haven't closed above it yet. So you gotta wait for this to get taken, find support, get back in there on a 5-minute level. Your hourly hasn't really given you anything yet until you get a body of breaking above here. So we've got nothing there. 15-minute chart. You've got this, there's a little imbalance here, or a fair value gap that's just been broken to the upside. Come back down, find support at this. You want to see this start pushing higher. So 5 minutes hasn't given you that yet, but the 15-minute has. And now you want to see a body close above here. And that would be 15 more minutes. You'd have to wait for that one. So the 5 minute, you want to see it close above this level here on a 5 minute first, and then you'll see it before you hit the 15. And then 1 minute's not giving us anything yet. And the 4-hour chart is giving you a continuation on the downside. Did we take out that low? Yeah, we already took the low out. Immediate rebalance. So if we close above 916, you're kind of stuck in these two D. There's one that says you can just come higher to come lower, or you can just go higher, break that 912, break that on a close, and then come back, find support at that candle or at 868 off the 6 a.m. candle again, and then continue going higher. So if you get a reversal at lunch hour and back into this level at 6 o'clock, I'd like to see 6 o'clock hold price and go higher. So now see, that's twice I've been scared out of a continuation with my rule, but that's okay. And it served me more than it's hurt me. And I already took small losses there, and I took a big enough gain that it offset the losses there. So I do not want to see this get through the mean threshold there. So that there is the line in the sand. I don't even want to see it get down. I'm going to be just under that now. I don't want to see that mean threshold get tapped again. I want to see that just roll out of here now and keep going higher. It's a 15-minute giving me. So basically I'm saying I want to see this fair value gap stay open. So if you're sitting just below that low, right there, in case it does come back and fill it and then go higher, you don't want to see that close below there. So that's where I'm sitting there. Oh, you see how there's a reverse right here? Body's traded below it. If we come back into that, that should be the out right there. So this is going to tuck right up behind here because I want to see it take it out right here. So I'm going to leave this alone. I'm not going to look at it right now, but if we can get back into that level, that's where you want to close out your trade for this long, because we got a reverse, traded below it. If we come back into it, you get your trade off right there. So I'm going to put my take profit, instead of it being up there, it'll be right here. And then I want to see if that holds, comes back down again. If it runs through it, then as soon as we come back and tap that, I can get back in sync with it to go lower, or higher, I should say. Anyway, that's my thoughts on that one. I'm locking in $5 grand there. No body above here yet on a 15. Literally closed on the high here. No body above it yet. We have now hit 50% of the regular trading hour gap. So if that holds there, just wicks above the high and then comes back into this candle down here. That's the 6 a.m. candle we're looking for. It's also the 4-hour chart. It's 4-hour chart is the open of the 6 a.m. candle from 4 hours ago. You see them all sitting in here? Some bigger ones on here. We're getting to 11 o'clock, so we should see a nice little retracement back into that range. Yes. Let's wait for the next macro. Do you notice something in here, Hadi? Look at this. See that? 50% of this range we created from 10 o'clock to 11 o'clock. So the open range of the morning from 9:30 to 11, that holds 50% retracement, puts us right on that 8:30. You see that? And if we go higher, so if you're predicting 50 to 62%, this is how you kind of reverse engineer this. You go here like this, and then you push it up, and you go like this. Where does 62% put us? Runs right back up into that first opening fair value gap, and then retraces back to 62% of the range is your 8:30. If you were reverse engineering and saying we're going to take one more little run higher before coming lower, 50% will put us right inside that 6 a.m. candle again, which is right inside the four hour open of the 6 o'clock candle. So there's multiple different things you can look at here for kind of predicting where you think this might head to if that is taken. Yes. Yes. I'd like to see it hit your 8:30. Open again. Come back there and take that at lunchtime, 11:30-ish. This one hasn't been hit. Did my gold get taken out? Yes, it did. So we're locked in $5,000 on that one. And I want to see if this level gets taken. So we've got this one is reversed. Traded below it. Come back into it. Now I want to see if this ends up being... The difference here is that if this one closes below here, then we're like, okay, now this was not a bear trap. The bear trap was if we just come back to that level, fill it, reverse, and then go higher. And continuing in the trend that it's going, right? Here's another example of the same thing I'm looking at here. See how you've got this, get this, wait for this commercial to be over with. If we take out that low, which we did here, you trade back into it, you expect it to continue taking out this candle. It does. And then you get an immediate rebalance candle, trades back into it, and then we get a continuation, takes out this high, you trade back, or sorry, takes out this inversion here, comes back into it, and extends all the way up into the rejection block, and then finally takes the high. We get a new reverse. So I'm looking for, if we do get a retap, and this one here gave you perfect opportunity there to keep going and look for it to take out that high. It does. Keep going before it finally takes the high. So I want to see this one get, just so for my own edification, I want to see it take that one out there so I can feel better about taking the profits where I did. If we close below that, then I'll be like, yes. And I think I lost $2,000, potentially $2,000 out of that, just watching this level. Okay, so now we got new high. Let's see that go higher. So I want this, I think this is going to emphasize my point here. This would have been a nice little turtle soup here, buying down in here, but waiting for this one here where we bought off of the reversal through here and then chickened out because it traded below. If you catch these early, right from the 10 o'clock turn, so expecting a 9-10 turn, here's your 10 o'clock turn, and then you just let it run. And all these little in and outs, you forget about them, just leave it. Once you get, that's why you'll see Michael take these trades in here like this. He's aiming for a daily and he'll let it sit through all of this. And it comes these wicked reversals and he's still got a stop loss sitting down here in loss. And then it's not till later on in the day you see him move it up a little bit into profit. But he really gives a lot of space for this thing to grow in here. And here's this multiple opportunities we saw to get in and chickened out, as opposed to just 10 o'clock, catch that reversal right there, catch that reversal and just let it go and leave it alone for the rest of the day. As soon as it takes out that high, move to break even if you want and just let it roll. But you'll be watching that number over there and saying, I'm willing to give that all up just to go back in the hole again. No, all that starts to play with your head. So the question now is to ask yourself, at 10 o'clock on the TIBs, when I talk about 9-10 turns, and you get this, catch this nice reversal at 10 o'clock here, you go, I'm leaving this in for the rest of the day. I'm heading for my upside objective. Let it run. If you have a bias for a long, of course. Because now I want to see if that level there ever gets taken for the rest of the day, or Tuesday's low rest of the week. So I want to see. That's the problem I have with holding on to it, is I talk myself out of it with multiple different entries and stuff, which is what happens when you're in this low a time frame. You could look at it as another way to look at it is saying, if I catch this on the 1 minute in a 9-10 turn, and then switch over to a 5-minute chart and manage it from here. So in other words, it takes out this high. That's all good. Looking for the premium box, takes that out. Now I want to see it go through it, come back, find support at it like that. And then I want to see it continue going higher. Good. So I'm still in that. So you're in down here on a 5-minute chart, or on a 1-minute chart and a 5-minute chart. We're looking for the first sign of a reversal, of a TPM3. So in other words, if it trades below this level on the close, then I can close that trade out. So you switch over to 5-minute chart. Or here's your macro here at 1050. See it trade through here, take this out on the downside, come back into this candle or this breaker, and then we want to see a run lower. Not just a wick below here. No body here. I would like to have seen that close below here, this come back into this candle, and then start coming lower. No body below here yet. If this comes all the way back up into here, then that's a potential short with this fair value gap as SIBI here as your buffer. You want to see that stay open. So we'll watch, see where this closes now. Yeah, we're right off 50% of the regular trading hours, hey? And now you've got a distinctive reversal. Body's below here now. What's that short here? I'll put my stop loss right up here. And I want to see a return to 6 a.m. As soon as it takes out a low, technically do not even want to see it get back above this breaker here. So that's my rule. Stick with your damn rules. See how that becomes, this low's taken, this becomes the reversal, and now I'm stuck between here and here. I don't want to be it go through there, then take that out and go, I saw it go through here already. So it already gave me the indication it wants to go higher. So if that's the rule, follow the rule. So I don't want to see it close above that mean threshold of that candle. Institutional order flow entry drill will be fine. and then continuation on the downside. There's the body, there's the institutional order flow entry drill. Now let's go snap down. So it takes out that low, I'll go to break even. No, I don't want to see another wick getting back up in here. 50% of that wick. So watch how it acts now. It's already moving through, doing what I don't want it to do, because I don't want to see it more than that wick go through there. So we'll see if my paranoia pays off. It's got to start coming down. That wick coming back in there, I don't even like that. And the fact that it took out 50% of that wick, don't like that. But we've got this breaker inside here. We could be banging around inside that mean threshold. So for the sake of a little wick and a little abuse there, I'll let that roll. I don't want to see it get back through here though. Too many wicks. Don't like it. That could rip all the way through me and take me out now. But I'm going to leave it on just for the sake of showing you guys something. It's a demo account, but I just want to show this whole paranoia I have about this coming back on that wick. So if this comes back and takes me out right now, I was already looking at saying I don't like it when it gets back through here. There's the mean threshold right there. That's it. I don't even want to see it get back through there now. Nope. I don't like it. The watch is going to come back into this range here now. And then I want to see it get back below here before I think about going short on that. This is why I hate these wicks. That 50% of that wick there is all I want to see it come back to. And the fact that we wick through it, froze on it, closed above it, and then come back into this candle's mean threshold. Now we're pushing higher. That's why I don't, you got to watch these things here. That's why if it's not acting the way you want, just get out. So that would have come back and taken out my stop loss. So now we're traded above that level. Now you tap on it right here. Now you want to see it come back in between here and here now. Exactly what we said. So that would have been a full stop taken had I not got my little paranoia showing up right there. Now come back and tap that level at the 4 a.m. and still go higher. And then we want to see if it gets through 923. The 15-minute breaker, this one here. Yes, that's a good point. It's a good one, Derek. We'll see. Right now, this is still bearish. Now it's 51% bullish inside this range. So if we get below here again, I'll be going back to bearish. So I'm bullish, bearish. So this bull supports, this bear here says we're going lower. This one says we're going higher. Which one of these two fighting back and forth? We'll see if it closes below here. Then we're back to bearish again. Then you watch the pressure on this breaker you're talking about, Derek. And we're expecting a reversal to occur around 11 o'clock, right? And this is the 11 o'clock. And this is giving us that bearish kind of so this one's winning, this one's losing. We close below it, tap it, get back in sync, and you can go back short on that now. Now if I close this back above that level for me, I'm on the wrong side of it again, and this is where you get beat up on trading below it. See how there's a little tiny candle below it? You want to give that the flexibility to be able to roll over and come down. If it doesn't, then this is too much high resistance for me. Move to the sidelines. $19,889 to this low here. That's it right there. I don't even like wicks getting through there now. So we're back inside this range again now. So you see how you can get beat up over and over and over again? See how many times you said, okay, it's above it. Now I'm going to go high. Now it's below. I'm going to go low. Above it, high. Keep giving up profits inside there. And if you've maxed, if you've got some heavy leverage, you're going to get your ass handed to you. So all the profits I was making over in gold, you're just starting to give them all back here in this kind of stuff. So you're in high resistance now between these two. They're still battling. We have not got a good body below here. You look at it. I did not take into consideration this. This is why. Right there. See that imbalance? You have to include this imbalance with this right here. Draw it across. Did we close below that level? We did not. We just traded back into it. Wick did a little bit of damage, and now we're trading through it. So now we're going higher. I looked at the fair value gap only. See how now it trades below that level? I did not include this. That's my bad. Poor analysis right there. That was the difference between taking it and not taking it. There. That was just my set of rules anyway. You see it close above here? What trade here? Now this has to hold, and this has to hold. We've traded above this one now. We've traded above this one, and we've traded above this one. So bullish, bullish. Bearish gives up, looking for a long continuation. So I want to be below the lowest one because that has not been re-accessed yet. So, and we're in this consolidation. So you got to sit kind of like right below the low there. So we'll let that sit there now and see if we can continue pushing for London's high. See this one right here? That's the hourly. Body's traded now above this level. If lunch hour brings you back into this level and you start to trade higher, look for this mean threshold to give way. If you can get above that one next, then look for that to provide support and look for your premium box up here. A little guy right there. Body closes above the high. Come back, use the high or 50% of the wick of the high for support to go higher. Look for this premium box up here at 655. Sorry, 650 to 654 or 654 big figure. So just above this high here is the next premium array. So we wanted to see it retrace back into here or here, remember? All these little extra little spots here at 50% of that range. So haven't quite hit that. We haven't quite hit it yet. So let's see if lunch hour takes you back into here and then goes higher. What's gold doing? See how gold, if it came back and filled that. Now I want to see it get above here and continue going higher. That one, bear trap. Gone higher. I hate all this waffling. It's looking bullish, so many sell-offs left. Now, here's a theory I have, and I don't know if Michael's mentioned this. That's probably why I have it as a theory. It's probably something he's mentioned in the past. You guys can let me know if you've heard the same thing from him. If you do not get a retracement on that 1130, it's a very strong bullish sign. Like 11 to 1130. If you don't get that retracement to the 50% of the range, then it's a very bullish tendency that you're just going to keep shooting up for the rest of the day. And here's 11 o'clock. Give her the rest of my gold profits back today if that hits me. I do like the lack of wick on the 6 a.m. candle. So small little high here. We're back through this one again. So it's starting to look bearish again. Back through here, you've traded below that low. You've come back inside it, traded below this one. And we're back in, if we trade below that one, we got 3, 4. This will be 5 to 1 if we trade back through here. So if that 4 a.m. candle doesn't hold right now, I'm definitely on the wrong side of this. See how we've switched it up here. We've traded below these ones. You want to find support at them. Stop loss is coming right up to here now. I don't want to see that. So we've tapped this and we've even got a wick through it already. Don't like that. I'm on the wrong side of it. Welcome to 11 o'clock. All of those arrays that just keep giving you the idea. It wants to go higher, goes lower. Trades through you, breaks that, breaks this, keeps coming lower. You got 1, 2, 3, 4, 5 levels of, guess what, where we're going, we're breaking all of them. We're going lower. You can see all of them failing right there. Unfortunately, they did not give you enough wick here to get back in there and take some of your, reduce some of your losses. If that wick would have come back in there, you could have cut your losses a bit more, but it didn't. So that's why you start chasing it back up, and then it comes back and taps you. I wanted to see it get to there. As soon as it gets there, it would have been right up. Start taking portions of your trade off so you can get the rest of it off there. But it didn't. So now we're back into a continuation of the downside. But that's what you have to watch for. When you see it failing, it's a grand failure, and saying, oh, that's the only little piece it gave you back before taking your stop loss sitting down here. So now you want to see this provide support at that level right there at 4 o'clock and come lower. So I'm going to go short there. And I'm going to put my stop loss above here. This one. And because we're in a consolidation, I just want to show you this. I just want to show you this level. See if this is acting the way I want it to. This should provide me some support here now. Roll over and come back down. At 11 o'clock, where we're expecting a reversal, then if it trades back through me again, it's in more high resistance, and you can see how you can keep getting beat up over and over again. And again, it's just demo account, so I just want to show you how these high resistance times can keep taking you, swiping you, even though when they're acting the way you want them to act, they're nice and clean. So there's the top of it right there. Now you don't want to see it wick through that. You don't want to see a body get through that. You want to see that just come straight through and down now. That's the level of support you want to look for. So now this, I pull in tight right here because I don't want to see that go any higher. Because that's done, right? If we trade through that, then we know we're coming back into the range again, and that's not what we want. And it's also this reversal here and this reversal here. Now, if it even comes back into that opening again, you got to close out your trade because that's going to go higher. I don't even want to see it come back through that opening again. It starts to wick back up here again. Close it out because it's going to come higher. We've traded through this level, You've come back to this level to find support. And now we're looking for a run higher. Swept the lows, give you the reversal, give you an opportunity to get long. So that's the wrestling between these two again. This one wins. Welcome to consolidation and how you can get beat up in a consolidation. So I hope that demonstrates how this level right here, trade below it, run it, tap it. You want to see it go higher. Or the shorts, you want to see this short hold right here and roll over and come back down, staying inside this range. This is the one for the guaranteed for the shorts. So you want to see that hold. And now we've traded a body above it. And when we come to the premium portion of this range, which is up here. So now you're back and forth into, are we going to go long? Are we going to go short? You need to see that give way and this give way down here for that to continue going lower. And you keep throwing more money at it, hoping to catch the run out of there, or you just keep getting beat up in there and watching your money get chewed up. So good examples of high resistance liquidity runs and how these wicks will destroy your account when they're acting outside of the precision we're looking for when markets are smoother. Computer now. So discount, premium, what do your higher time frames tell you? Well, the 5-minute says it wants to go higher. The 15-minute says it wants to go higher. The 4-hour wants to close above that 912 and then use 865. This 6, I can see lunch hour coming back into here. This will be 3 times today if this rolls over and comes back down to take the short. But the stop loss was too tight. That's 3 trades that failed, and they still went in the direction we're looking for them to go into. Time and price, man. Anybody ever see that Lady Gaga concert highlights down in Rio? Or in, was it Rio? Casablanca? Man, oh man, she had 2.1 million people at her concert. It's the world record for Largest number of people ever get, and it was just massive along the beach. Absolutely massive. She did a phenomenal concert down there. You thought Taylor Swift could draw a crowd. Jeepers, that Lady Gaga just had like 2.1 million. You hear 2.5, 2.4, 2.52. Either way, 2 million people is a massive amount. Even if you got $1 a person, you made off of that. You made $2 million for your concert. And you know for sure she's making more than that. It is indeed, Hans. It is indeed. The rest of your regular trading hour gap is ripe for the picking. High resistance. We took the lows that we're looking for after returning into here. Take the lows, pay yourself at the lows. Now we've traded back through that level again, found support at it, and we're pushing through higher again. See how these levels, once they become inversions, you use inversions to go one way, then you use the inversions to go the next way. So here's a good example of trades below it, to it, extends the range. Comes back up and through it like we talk about, and now we've got to run back higher. Look for this premium box here again, this resistance. So from here, you'd be pulled break even. As soon as you hit that box, break even, pay yourself, pay yourself, pay yourself. Keeps going, rejection block, pay yourself. Leave a piece on to see if you can get up here. If you close above mean threshold, come back, find support of that. You can load a new trade on to go to that next level. Look at this next DAX move here. Forward's finally broken out. Nice wick. See if it closes there today. British pound hit our objective through it, found support at it, then dropped through it back into here. We traded below that level now, so we come back, find support at this, look for this to continue coming lower. All these upside objectives to get hit. So you come back into here, I'm bearish on pound. That's the support level here. See inside that one there? We're in it. Now if we get a reaction off of that and come higher, I want to see it close above this level here. off the high. Chat is disconnected. And now it's successfully connected again. All right. Fair value gaps filled. Now you don't want to see it come any lower than that. See it, tap it. That's the kind of wick you want to see where it hits it and then leaves. You want to see intention out of here now and start running up for these upside objectives we mentioned earlier, and then see if lunch hour pulls us back into this 860 level. Again, this whole another next candle coming down here like this, you don't want to see that. And no more than 50% of that wick. You want to see it get out of there. Oh goodness. You guys been doing a lot of chatting on the thing there. See 117 messages on there. It's too choppy for me. I do like this level though. I don't like the fact that we're revisiting it so many times with a wick. Again, remember when we looked at that retrace 50 to 62%? That didn't occur in 11 o'clock, 11:30. If we get it from here, we'd have to take all this out from box to box here. So we're trading below here. That's the first indication. All these wicks, you go, I don't like all the wicks all the time. You want to see it, tap that and go. Like, don't even mess around here. Just get out of here. The fact that you're revisiting it with 1, 2, 3 candles now, and now we're wicking through it into this candle's body and this old imbalance. That's fine. Tap it. Let's go. You got to get through here now. 934. Thanks, Adi. If you like what we're doing, hit the like button, thumbs up. Give me the thumbs up. I do appreciate it. Just lets me know you like what we're doing. And if you don't, then that's fine. You keep your thumbs on your mouse. And if you're new to our channel and you like what we're doing, we're here every day. We're here happy to to help you out with price action study. Subscribe, like, join us, hit the notification button. We'll let you know every time we're on. I've only got a few more weeks left, and then I'm taking some time off. And I may be taking some time off over the summer. And then I'll be back again in August, September, something like that. So you'll just have to chat with the D on the Telegram channel there. Once I get some time, I might do some London opens, some London stuff later on in the day, different timeline. That'll be in June. If I do anything, it'll be in June, mid to late June. For London. Otherwise, enjoy your summer. Enjoy your time off. If you want to take time off, that is. This is a little Shopify here, a little chop of horrors. Right off the 930. Right back inside it. Premium box. Traded back through it, into it, going lower. And what do we got here? Looking for a run back down into the little discount box here. You were in short there, Hadi? Where did you go short? Where are you looking? Where did you get in short? You traded below here? Or you just took a run? Are you on a higher time frame looking objective? It's pretty ballsy. Take a short there. Oh, 15-second chart. Yeah, you'll probably see something there. Oh yeah, okay. Traded below here. There, traded below it, came back inside it, go short. Take the low, pay yourself. If that's where you got in, I see your logic right there. That's the very thing we talked about before, where this discount array, premium and discount arrays. The discount array gets taken to the downside. You want to see range extension, trades back into it, see range extension, and it's exactly that. So yeah, that short, that's a really nice little 15-second short there, Hadi. Good for you. Well done there, Hadi. Nice. That's a nice 15-second short. It's nice that you're catching those reverses, trade back into the reversal and then go short. I like those discount arrays. They work. They're so good. Except when they're in high resistance like this, then they get frustrating. Right. Now you see the difference with this one here. We traded through it, and we also took out the low. So be careful how you utilize that one now, because you've already taken the low. Now you trade back through it on the upside. You start to use it as support to go higher. It goes back into another reversal, like the same kind of one we looked at when it was over here. Trade back into it, go higher. This gets used once that low has been taken and it's been used to go low. Then if it gets used to go higher, that's what you want to see, a break above, come back inside, run for the highs. And you got to be aware watching that. I was too busy watching a different idea over here instead of back here. And then when they overlap, it can really screw with your head when they're not clean back and forth like that. You're welcome, Eddie. Got to reward sound logic. They're logical entries, and it's not gambling. It's a logical place to take a trade, catch it, remove stuff to risk free as quick as you can, or quick as you logically can, provided it's still following the algorithm the way you want it to go. And then as soon as it hits your objective, take it out. And if that's just a simple low that's 10, 15 handles ahead of you, take it. If it takes off, who cares, man? Take your money, wait for your next setup. It's not like you don't get multiple setups over and over and over again, right? Thank you, Darren, done for the AM session. Okay. I'll see you later, Hadi. All the best, buddy. Yes, trying to close above 75% now. Regular trading are running up to the gap. Help a brother out and hit his like button. Some people, I tell you, they're really stingy with their like buttons. That's okay. If they don't want to hit it, that's fine by me. But I appreciate it, Mark. Thank you. I'm going to go for another 20 minutes or so here. Let's see if we get anything. going into lunch hour. That's exactly it. Like being behind someone driving 20 going 60 in a 65 zone. So true. Smart move at 8. Did my gold take off without me again? I want to see it. Just come back, give me a little kiss here, take me in for a long. Right there. Traded above it, into it. See if that holds right there and starts to go higher. There's the bull price I gave you for Bitcoin. Return off of here, run up to that premium box, pay yourself. Right to the money right there. And that was 092. That's 640 handles, 630 handles right there in one 15-minute candle. That's when it's doing exactly what you want it to do. Acting the way you want it to act. Fair value gap, trade above it, come back inside it, tap it perfectly, run to the premium array, box to box, or 15-minute reversal, trades back above it. Again, we used it to go lower. Now we're using it to go higher, trades above it. That's the kind of thing we're looking for in terms of precision. And you guys need to see that, screen capture that, study that reversal. So just run on the low, reverse, trade above, come back inside, go long. Premium array, pay. Use this, as if we close above that, use these two candles here as support to take out the mean threshold and then go higher. If it doesn't, rolls through, look for this fair value gap to get traded to. If it gets traded through, find support, look for a run below this low. If it trades back through it, look for a run above that premium box again and look for the high. Back and forth. When it's clean, when it's choppy as shit like this, it's not so, the wicks end up taking out your trade. But it's clean. When it's clean, it's clean. You can't deny it. I just trade demo on Bitcoin. I don't trade Bitcoin live with my own money. I should, because I can do really well on Bitcoin on the weekends. I've done some awesome trades on Bitcoin. And as you can see, I trade it a lot on weekends. I get on it tons and tons and tons and tons. Right. So I do trade it a lot on weekends. And sometimes in the evening when it looks really, really clean, I like to do some quick trades too. It's just more for practice for me than live. I tried trading it live before and the spread is just too huge to work with. Here, the spread is one handle. You don't see a spread of one handle on regular broker accounts. They usually got these ridiculous spreads on them, and I just take the precision away. Anything above 5 handle spread starts taking out your accuracy. I don't know a good breaker to use. And it's just that it's just so ridiculous. Unless you can see these massive moves, a spread of sometimes 100 or 200 handles is a lot. It's a lot. And it's just not worth it. That's why I like to just play it on here because it's so clean. Sometimes you can get such a clean price action on it. And I tell you, it's fun to just bump up your demo account. I think he'll still come back and get me here. Take me for a ride. Traded below it again, into it. The next one is this one here. Trade below that. Use the 4 a.m. to go lower. Here's the change in direction. Trade it below it. Trade it below this one. On the close. Open. So this candle's high is 25.5. This candle's open 24.75. Its high is 25.25. So it literally opened below it, came up, gave it a kiss, and ran lower. Took out this low. Now you look for this candle here. Trades below it, comes back inside it right there. And then you go lower. Look for this fair value gap here to get taken on the downside. If it trades below it, look for this one and this one as support to go lower. So just kind of watching these two right now. Good day. Enjoyed the stream again. Appreciate it. You're welcome, Stephen. All the best to you, my friend. Take care. Have a safe day. I've been testing out a theory at the 3 a.m. candle. Seems to be a major structure every day. I just took a sell at 70% of that hourly candle. You took a sell at the hourly candle? At the hourly candle. So much chop, so much wick stuff. I'm not impressed. It's Disney up too. Looking for this to come lower. I want to see this break through these lows here, find support with the little piggies, and start going down to the lower volume there. Finding support off the coffee. No body above here yet. You want to see ES pull up back up into this candle. It could fill all the way back up into here, roll over, and still come down. The ideal situation is this trade back up into the low, this breaker, its low, which is a fill of this first one, but you don't start digging into the second one. You measure the 3 a.m. candle from the low to the high. The whole candle, you mean? The 3 a.m. candle. And you took 70% of the 3 a.m. candle, is that what you're saying? From the high to the low on the wicks, right? Not the body. Come on. Oh yeah, I see what you're saying. 70% of the wick, the candle. That's good. If it's reliable, then I like the idea. We've retapped this low, looking for around these liquidity down here now. We've traded below here. See that? Traded back into it right there. Now you want to see it come lower. That's been the theme of the day, I think. Yeah, that's hourly right here. I saw you're to 70% there. As long as that's a consistent candle that you can expect to make a run on. Your next macro is has already begun. You want to see this range extension now. Let's see this go lower. And there you go. There's your range extension done. That took out that low. Pay yourself. From there to there, pay yourself. And this is a 5-minute objective, and that 4-hour objective we were talking about an hour or so ago, the 6 a.m. Looking at the 4-hour chart. So as soon as we break above here, I want to see it come back into this level right here at 865. 865. We'll put you right here at that 6 a.m. candle. And then you want to see it leave from there. and not just roll over and come back down, because where are we going here? There's a wick above this, no body. Find support, drive higher, get some of the love in here, and then push back up into this premium box. It's good support off that level. I'm going to go short there. I want to see this provide some support here. Now the trick is, now that we've taken that low, do we start to see a reversal and go back higher? So again, I could be on the wrong side of that if we break this high here. And we get back through this reversal and then start running higher, then I'm on the wrong side of it, get back in sync for a run higher. I like this 6 a.m. objective. Either way, whatever way this works out now, I'm going to, this will be my last trade of the day. And then we'll move to the sidelines and wait for tomorrow. I got a massage today. I need a massage. See, this wick came down here. It did not come through it. Don't like that sign. And we're constantly keep tapping on this again. That whole lunch hour crap. I measure the 3M candle, then I see where price is and take the trade from whichever side the price is on. If it's below 3M, I sell it. When it comes back, when it's above it, I buy it, retraces back into it. Interesting. Did you hear Michael talking about a 3 a.m. candle being significant candle? That's it. I don't want to see it getting any higher than that. I'm on the wrong side of this. I can feel it. I took that at a low after it took a low. And we've got this wick through here already. If that rolls over and goes back down, once again, I just got my ass handed to me with a wick again. Not the level of precision I want to see. This would just be the kick in the nuts now if it comes back down lower. That's hilarious. Again, no body got above it, but it put limit on that wick, and then the wick came back through one more time, tap the wick. That's the problem with demanding too much precision out of your charts, I guess. Right back into the breaker. Makes sense to put it above the breaker instead of there. You got 1, 2, 3 levels that all overlap underneath this here. See, the fact that it keeps coming back into this level, like, you're going to go, then go. Stop waffling around in here. You only want clean price action. Like, body breaks above it, comes back, gives it one tap, and then that's the kind of thing you want to see. Just like tap your spot, wick off, and then go. Tap your spot, wick off, then you go, right? Didn't do it. That's why I put the stop loss there. Just because that's the kind of thing I want to see, like this kind of stuff, right? Tap. As soon as it pulls up to there, stop loss goes there. You don't want to see it come back down there. It never did. It left. That's clean. That's the intention. This is all chop. And you see how it didn't do that? That's where it's all loosey-goosey. And that's where it takes me out. So that's the kind of precision I'm looking for. What I was looking at here, that's the kind of precision I want to demand out of the market. And, you know, you got to consider now you're in lunch hour. And you're in high resistance. You have to recognize this. Otherwise, as you saw, you get to give back a lot of, or all your profits you made in the day. You've backtested it a bunch of times. Mark, remind me on that tomorrow. You need to remind me on that tomorrow. When you come in, remind me, and we'll play it out. We'll play out the theory. Thanks for sharing it, by the way. I think that's awesome. I really appreciate you sharing some of your findings. So let's try it tomorrow. Remind me, please, and I can put it on the screen here so everybody can see it. So we can all get the benefit of that. So I'm going to go back and back test that in a couple of days here. Let's look at 3 a.m. Let's do an hourly chart here. So let's go back a couple of days. 3 a.m. Here's a 3 a.m. candle. Now, here's your 3 a.m. So when do you start to look at it? When do you start to say, okay, when do we come back and take 70% of it? What's your rule for that, Mark? Then I see where price is and take a trade from whichever side the price is on. At what time? Because if you say, all right, here's the 3 a.m. candle. If I'm going to go short off of this at 70% here, as soon as it comes back into that level, if you're trading below it, you say, I want to go lower. Trading 70% of that in, comes back, takes out the low. Good run. If you're looking at this candle here and you're trading above it here, you don't never get back into it. So that's no big deal. I see the logic in there. If you said we've closed below it, now I trade back into 70% of it. I want to see it go low. That would have been a really nice trade. 3 a.m. over here, right here. So if you trade above it right here, and you say if it comes back into 70% of that, which is right there, you want to go long. Oh, yeah, that works too. Mark, you might have something here, buddy. He's like, might. Of course I do. Here's the 3 a.m. candle. We haven't closed below it. We haven't closed below it. We haven't closed above it. So you're still inside it with all these candles. So you don't, it's not valid till you here. Then you see if we can get back into 70% of it, which you don't. It goes lower. So that one didn't work, but no biggie. 3, here's your 3 a.m. candle. We traded below it, trade back into 70% of it. Get lower. Trade back into 70% or more of it again, get lower. So you have to take it on the next hour. So you, after that hour, you say, am I trading below it or above it? If you can get back into 70% of it, take it short. Is that what you're saying? Yes, seems like something new to learn on that 3 o'clock candle today. Mark's going to remind us of that tomorrow, and we're going to play that out and see if that that works out. Still haven't got a body above here on the hourly yet. We got some wicks. No body breaking that, but we do have a body above this high. Tapped it. Now you want to see this go higher, get through the main threshold of this. This rolls over now, comes back down. That's a really crappy bull trap because there's no body closed above here yet. Oof, excuse me. I think that's going to be it for me, you guys. It's getting into lunch hour now, so this is where you really start to get back your profits. We've traded back. We've traded above. See, we a little tiny one above. And now we're already digging below it. High resistance. Not interested. Not interested. I'll find something. I'll make back whatever losses I took today. What did I take for losses? 2, 3, 4, 5, 6, 7, 8, 9. That's the 6th. So 4 grand. So I'm still 3 grand in the hole, 4 grand in the hole. I will get that back. I will get it back. Where's my trades today? 6. Right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 6 grand. 7 grand. I got to go up. I'll get that back. Don't worry about that. Oh, it could be any fib level. Okay. Oh, well, on an hourly chart, that could be a quite sizable stop loss then, Marcus. So you'd have to put your stop loss above the high of the hour then, right? So if you're getting in at any fib level, I would imagine any fib level above 50%. 50% can be quite a sizable stop loss. Yeah, thanks, Abs. See you tomorrow. I'll map out the rules for clarity. Thank you. Yeah, if you could do that, Mark, it'd be great. It'd be great. All right, I'm out of here. I'm gonna go get my massage. I'm glad to be back. I'm glad the camera's working. Everything's looking good. So I will see you guys bright and early tomorrow. See if we get a little cleaner price action on Wednesday. Yeah. Okay. Thanks very much for tuning in, you guys, and I will see you tomorrow.